The CPI report today was a victory for the markets. Let's talk all about it. I'll share my opinions, my positioning, and what I'm going to do about it going forward. Because basically, we just had a soft inflation report, and this isn't the first one. Let me show you. Let's jump into today's video. First, before we proceed with the video, I do want to mention today's video sponsor, which is Vantage Markets. If you're looking to trade CFDs for anything from gold to equities to stock market indices globally, Vantage has it all under one singular brokerage. If you'd like to check out Vantage, there will be a link down below in the description of this video to review what they offer. It's a really cool broker that, again, gives you such a diverse list of different things you can trade. Whether you trade FX, indices, commodities, whatever you trade, they've got it, which is quite cool and quite convenient. You can also access your favorite platforms like MetaTrader 4, and you can trade directly on TradingView with this brokerage. Really, really cool. Now onto the video. So here's why, long story short, today was a victory for the markets. Inflation has been coming down. Now, when I say a victory, obviously there are winners and losers in every single move. What I'm saying for the markets, I'm talking generally speaking about the risk on crowd, people who think that we can potentially see rate cuts this year and the economy not fall apart. That would be considered the bullish crowd, the risk on crowd. But even if you're just in the rate cut camp, which is where I'm kind of falling, where I'm mostly thinking, I think we see rate cuts this year, this was a victory. This was absolutely what the market needed to see. Let me explain. So inflation came down for a while, but it's been really slowing. It's been stagnating for some time. And then today's report signaled another cool reading on the US inflation rate. Now you might say, okay, but why is that so important today? Not only is it a cool inflation report today, but we've seen a pattern recently of now a trend towards cooling inflation again. This reignites the excitement about, wow, we are actually seeing progress towards our target of 2% on the US CPI. The US CPI getting closer to 2% is a very promising start for the Federal Reserve to cut interest rates. And it doesn't stop there, because there's also some good evidence in the labor market, which has been slowing, but not crashing. So there's this healthy idea that, okay, we need the labor market to just relax a little bit, wage growth to slow down, so we can get inflation under control. We're seeing some progress in inflation, so there's a lot of green lights forming for an interest rate cut. So let's prove it. If we take a look at yields today, which are what Treasury bonds offer, they dropped off of a cliff. Why would that be? Well, remember that the bond market, when pricing bonds, considers, well, how much inflation is there likely to be in the future? Because if inflation is higher, bond investors want more yield, because they're saying, well, there's going to be erosion from all this inflation on my actual return when I buy and hold a bond, so I want a higher yield. But if the opposite actually happens, we see expectations for inflation coming down, bond market investors might take a little less yield and buy bonds more aggressively. This is why personally I am long TLT, which is one of my current positions. I've been in this one for some time, and we're seeing a nice pop to the upside here for bonds. But it doesn't stop there. Let's stay true to the bond theme for a second. What we're looking at now is the Fed funds expected probabilities, the Fed watch tool here for rate cuts or not. And what we can see here is that as we go out to the September 18th meeting, we now see almost a 90% chance that we are going to see the Fed funds rate come down from 525 to 550 towards the lower, the next, kind of rate cut, which would be down to 500 to 525, a rate cut of 0.25% or 25 basis points. So we see now a high probability of an interest rate cut by September, but stay there, don't move. What about the 18th of December, the end of this year, the last Fed meeting? Look at the probabilities for a rate cut here, a 99.3% chance that we're going to get at least one rate cut by that time. Now, there's a possibility here. You can see right here, 2 rate cuts might actually be possible, and now maybe even 3. So what we can see here is that the expectations for rate cuts, long story short, increased. The probability for increased rate cuts this year is on the table. With cooling inflation and slowing jobs data, what does that leave us with? Well, it leaves me with personally one of my better trades this year, which is the gold move. And these are all of my current positions. Let me show you this really quick. I'm long technology, which is pulling back today, but still doing quite well overall. I've been long this one since April. Gold, which I've been long in recent weeks, is exploding today, which is becoming one of my biggest biggest winners recently. TLT, as I've mentioned previously, and silver. So metals, here's the long story short. Like I said, I am long metals. I'm long gold and silver. And this pop today is in celebration of the Fed cutting rates. Why would that be good for metals? Well, think about it. The dollar being weaker because of interest rate cuts would make gold more costly per USD, right? And something to mention about the gold market here is that we've been in a bit of consolidation, but we're finally starting to see some higher lows and higher highs. And with my long position in place, I've trailed my stop loss further into profit. And I've shared, by the way, all of the updates to all of my positions inside of our Discord channel. If you'd like some information about that, there will be links down below in the description where you can actually sign up to get a VIP membership with us and get notified anytime I take a trade. And here's just a quick update of what that looks like. Here's the gold update that I sent out this morning, and we'll see where gold goes from here, but I am trailing a stop and letting that winner continue to run. And while I'm out here pitching products, let me also do one last pitch for you. Today is CPI day, and we are currently doing 55% off the Edge Finder. If you're a regular viewer of my videos and you are trying to get more into the fundamental analysis side of things, we're currently doing 55% off of our premium software that many traders around the world are using right now to better understand fundamentals as well as add them into their trading. So if you're not using economic data and you'd like to be, consider getting access to our tool. You can currently get 55% off that. And if you're interested in a Discord membership, by the way, you can actually bundle the two of them and get a huge discount savings. So if you're interested in that, today's the day. Here's how you can do it. The link down below in the description, the first one in the description, will take you to a live chat center where you can speak directly with a member of our team and get information about the discount, as well as ask any questions that you might have about our tools or service. So check it out, take advantage. There's your pitch for the day. It's a great discount. So if you've been thinking about it, take advantage down below, and let's keep going. So the next thing is that the Nasdaq's actually down today. Why is this? I'll show you. Take a look at this heat map, which is very, very unique. What we see is almost an exodus out of the big names, right? Apple, Nvidia, Microsoft, Amazon, Google. There's money going out of these companies, it seems, and into other ones, which is interesting. It's not been the theme this year, but today we see a bit of a change in the pace. We see big companies being sold and smaller ones in the S&P 500 getting a turn. Now, this has not been the theme of this year. If you take a look at the 1 year performance, what you could see here is that the most green goes to the big guys. So maybe we're seeing a little bit of a change in that theme. Adding on to that theory, we do see the Russell 2000 index just flying high today, which is a really remarkable move. Finally seeing some move in the Russell. I mean, this thing has been, really truly like dead money for a couple of years that has not moved anywhere. But we're seeing some progress here. And if we see a break through these highs, maybe this soft landing possibly could be threaded. To thread the needle of a soft landing could happen, where we see, again, the economy not completely fall apart, but inflation comes down and we see interest rate cuts, which, bring the consumer back into the picture. Right now, the consumer's been struggling, and that's been holding the Russell down. Growth has been a struggle, so we'll see where this one goes. But the Russell is looking really strong today, and I'm watching it closely myself. I might look to get long if we can see some stabilization in the economy as well. I'd like to see some PMI numbers beat or something like that to give me a positive reading on the Edge Finder scoring. You can see currently the Russell is getting a neutral reading. For me to get bullish on the Russell, I need to see this thing higher up on the list. Give me a bullish reading based on economic data, and I very well might buy the Russell, but I'm keeping an eye on it. It's not a current trade for me. I am long gold, I'm long silver, and I'm long technology via my XLK position. That's all I've got for you today. If you enjoyed today's video, make sure to hit the thumbs up button. And remember, check the links down below in the description to sign up with Vantage if you're looking for a better brokerage, or if you're looking to get access to our tools and services. We got a huge discount going on for CPI, so don't miss it. Link in the description down below. Have a great day. See you guys next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.